Ethereum stands at the center of digital assets, acting as the backbone for a new era of finance and technology. Since its inception, Ethereum has not only introduced the world to smart contracts, but has also become the foundation for a rapidly expanding universe of decentralized innovation. It powers the explosive growth of DeFi, NFTs, and a vast ecosystem of decentralized applications that are transforming how we interact with money, art, and even governance. Every day, millions of users rely on Ethereum's network to transact, create, and collaborate in ways that were unimaginable just a decade ago. But Ethereum's journey has been anything but simple. It's defined by the ongoing challenge of balancing security, decentralization, and scalability, a dilemma known as the blockchain trilemma. Developers and the community constantly strive to improve the network without compromising its core values. High transaction fees and network congestion have long been obstacles, limiting mainstream adoption and frustrating users. These challenges have fueled a relentless drive for innovation, pushing Ethereum to evolve faster than ever before. Recent upgrades like Denkun and Pectra represent a major leap forward. They're not just incremental improvements, but bold steps toward making Ethereum more scalable and efficient, with the goal of serving billions of users worldwide and supporting a truly global digital economy. These upgrades introduce foundational changes to the protocol, laying the groundwork for Ethereum to become a secure and robust base layer for a new generation of Layer 2 solutions and decentralized applications. For investors and users alike, understanding these upgrades is crucial. They directly impact Ethereum's utility, security, and long-term value, shaping the future of digital assets and decentralized finance. In this script, we'll break down the Denkun and Pectra upgrades in detail, exploring how they affect transaction fees, staking opportunities, and the ever-evolving Ethereum ecosystem. We'll also look at what these changes mean for developers, users, and the broader crypto landscape. Join us as we dive into how these groundbreaking changes are redefining Ethereum's potential and setting the stage for the next chapter in blockchain innovation. The Denkun upgrade, launched in March 2024, marked a pivotal moment in Ethereum's journey toward true scalability. For years, Ethereum's growth was limited by high transaction fees and network congestion, making it difficult for the platform to support mass adoption and innovative applications at scale. The centerpiece of Denkun was EIP 4844, also known as Proto-Dank sharding. This upgrade introduced blobs, a new type of temporary low-cost data storage designed specifically for Layer 2 rollups. Blobs allow these rollups to post large amounts of data to Ethereum without clogging the mainnet or driving up costs. By enabling rollups to use blobs, transaction fees on Layer 2 networks dropped by over 90%. This dramatic reduction made decentralized apps and services far more affordable and accessible, opening the door for millions of new users and use cases that were previously out of reach. The impact was immediate and widespread. Layer 2 solutions like Arbitrum, Optimism, and Polygon saw a surge in activity as users and developers flocked to take advantage of lower fees and faster transactions. Ethereum's ecosystem began to expand rapidly, reaching new communities and industries. For investors, Denkun was a clear signal that Ethereum is committed to a roll-up-centric future. The mainnet is evolving into a robust security and data layer, while Layer 2s handle the bulk of transactions, ensuring both scalability and security for the network as a whole. However, this shift also brought new challenges. As more activity moved off the mainnet, Ethereum's fee burns decreased, raising important questions about the long-term sustainability of ETH's deflationary ultrasound money narrative and its impact on tokenomics. The result is a more modular, flexible, and scalable Ethereum ecosystem. Mainnet fees are lower, but the network is now better equipped to support a diverse range of applications and users, from DeFi to gaming and beyond. For investors and users alike, it's now essential to monitor both Layer 2 growth and ETH supply dynamics. The interplay between these factors will shape Ethereum's value proposition in the years ahead. Ultimately, the Denkun upgrade laid the groundwork for Ethereum's next era, one where the network can scale to meet global demand without sacrificing its core principles of security and decentralization. The Pectra upgrade, launched in May 2025, marked a defining moment in Ethereum's evolution, its most ambitious fork to date, and a testament to the network's relentless drive for innovation and scalability. For the first time, Ethereum combined major execution and consensus layer improvements in a single upgrade, signaling a new era of technical synergy and collaboration between core development teams. At the heart of Pectra was EIP 7251, a pivotal change that raised the maximum validator balance from 32 to 2048 ETH. This move was designed to streamline staking for institutions and large players, making it easier for them to participate at scale and manage their operations more efficiently. By consolidating validator balances, the network significantly reduced overhead, cut down on redundant processes, and made reward compounding more efficient for everyone involved. On the user side, EIP 7702 introduced a breakthrough in account abstraction, allowing regular wallets to temporarily act like smart contracts for a single transaction, without the need for complex setup or technical know-how. This innovation unlocked powerful new features, such as batch transactions, sponsored gas fees, and customizable transaction logic, all while keeping the user experience simple and intuitive. As a result, decentralized apps, or dApps, now feel as seamless and accessible as the best Web 2 applications, bridging the gap between traditional and blockchain-powered experiences. Pectra also doubled blob capacity for Layer 2 solutions, reinforcing Ethereum's roll-up-centric vision and paving the way for even greater scalability, lower fees, and faster transactions across the ecosystem. For investors, these sweeping changes mean a more efficient, secure, and user-friendly Ethereum, one that's better equipped for mainstream adoption and institutional growth. Altogether, Pectra stands as a holistic upgrade, polishing every facet of the network and setting the stage for Ethereum's next chapter in global finance and technology. For ETH stakers, Pectra was a game-changer. EIP 7251 allowed large staking providers to consolidate thousands of validators into just a few, slashing operational complexity and costs. This makes direct staking more attractive and efficient, potentially shifting power away from liquid staking protocols. Security also improved. EIP 7002 enabled cold key withdrawals, reducing theft risk and aligning with institutional standards. Validator onboarding became faster, with EIP 6110 cutting wait times from hours to minutes. These changes make staking more secure, efficient, and accessible, key for attracting institutional capital. For investors, Pectra de-risks staking and strengthens ETH's yield proposition. The upgrade matures Ethereum's staking ecosystem, making it a more compelling investment. Staking is now safer, simpler, and more scalable than ever. Ethereum's upgrades aren't just for developers, they're transforming the user experience. Denkun slashed Layer 2 fees, making everyday transactions affordable and opening the door to mass adoption. Pectra's account abstraction lets users batch actions and enjoy sponsored transactions, removing the friction of gas fees. Now, dApps can feel as smooth as traditional web apps, crucial for onboarding non-crypto natives. These changes shift complexity from users to developers, driving a more intuitive ecosystem. For investors, better user experience means higher retention and growth, key drivers of long-term value. Ethereum is becoming accessible to everyone, not just the crypto-savvy. Ethereum's future is modular, with the mainnet as the secure settlement layer for a constellation of Layer 2 rollups. Denkun's blobs and Pectra's expanded blob capacity slashed costs and boosted throughput for Layer 2s. This empowers rollups to innovate, scale, and pass savings to users, while Ethereum anchors security and data availability. The upgrades don't compete with Layer 2s. They enable them, creating a diverse, resilient ecosystem. For investors, this modular approach means Ethereum can support mainstream apps in finance, gaming, and beyond. The network's value is now tied to the success of its entire Layer 2 empire. As activity moves off-chain, Ethereum's role as the central hub of security and settlement only grows. The bull case, a thriving, interconnected ecosystem all secured by ETH. Despite Denkun and Pectra's technical success, a disconnect has emerged. ETH's price surged, but on-chain activity stayed flat. Daily active addresses and mainnet transactions didn't spike, and DeFi growth was modest. Most gains reflected ETH's rising price, not new users. The rally was driven by institutional futures markets, betting on Ethereum's future rather than current fundamentals. This creates risk prices outpacing real adoption. For investors, it's vital to track network metrics, not just price charts. The upgrades lay the groundwork, but realized adoption is what matters. The key question: will user activity catch up to justify today's valuation? Watch for signs that Ethereum's new capabilities are translating into real sustained growth. ETH's ultrasound money narrative relied on high mainnet activity and fee burns outpacing issuance. Denkun's success moved transactions to Layer 2s, reducing mainnet fees and the ETH burn rate. With issuance steady and burns down, ETH's supply has started to rise, raising inflation concerns. The deflationary thesis now depends on renewed demand for mainnet block space and ETH as a staking asset. Investors must monitor both mainnet and Layer 2 activity, as well as net ETH supply. The long-term bet Layer 2 growth will eventually drive enough demand to offset issuance. Until then, inflationary headwinds are a real risk. Vigilance is key as Ethereum's supply dynamics evolve. Denkun and Pectra are engineering milestones, making Ethereum more scalable, secure, and user-friendly. Yet the anticipated surge in adoption hasn't materialized. Recent price rallies are driven by speculation, not usage. Investors face a choice bet on Ethereum's current fundamentals or its future as a global settlement layer. The upgrades have built the infrastructure for mass adoption, but the users have yet to arrive. Success now depends on real growth in network activity, Layer 2 adoption, and ETH demand. The risks are clear. Stagnant usage could undermine today's valuation, but if Ethereum's roadmap delivers, its network effect could become unstoppable. Investing in ETH today is a bet on that future, one that requires patience, vigilance, and conviction.